All right, let's get right into it. There is something massive happening in the financial markets right now, kind of under the radar. People are calling it a new gold rush. But the goal this time around, well, it's probably not what you're thinking. So let's dig in and figure out what's actually going on here.
So what is this resource we're talking about? I mean, if you just follow the money, and I'm talking about the smart money, the billion-dollar bets, there's one thing, one single commodity that just towers over everything else right now.
Yep, it's not a precious metal, it's not some new currency, it is raw, unadulterated computing power. The demand for it, thanks to this AI revolution we're all living through, is absolutely insatiable. And that, right there, is the new engine of global investment. So yeah, forget about crypto for a minute, forget about rare earth metals. The real gold rush is for compute.
Look, this whole AI boom, it's easy to think it's just about clever software, like the chatbots we're all playing with. But that's not the whole story, not even close. At its core, this is a story about a massive physical build-out. To make all that AI magic happen, you need a staggering amount of infrastructure. And right now, investors are in a flat-out scramble to build it.
And that's where the classic gold rush analogy comes in, right? You always hear that the real money was made by the people selling the picks and shovels. Well, what are the picks and shovels of the 21st century? They're data centers. We're talking about massive, power-hungry buildings just packed to the gills with computer chips. They are the absolute foundation for everything AI. Without them, none of it works.
Okay, so how do we know this isn't just hype? How do we know this shift is for real? Well, for me, nothing screams sea change quite like a major player in one super-hot industry suddenly jumping ship to another. And I've got the perfect example. A company that was, until very recently, all in on Bitcoin. Check this out. This quote is from Bitfarms Ltd. Now, if you're not familiar with them, they are one of the biggest Bitcoin miners on the planet. And they just announced they're winding down their crypto mining operations to focus on providing computing power for AI. I mean, let that sink in. A top Bitcoin miner is saying the future isn't in mining Bitcoin, it's in powering AI. That is a massive, massive signal to the market.
So let's break down what this pivot actually means, right? They're basically swapping one market for another. They're leaving a world driven by super volatile crypto prices, and they're jumping into a market driven by the, frankly, explosive and still growing demand for AI. It's a strategic move away from very specialized hardware for mining toward the much broader world of general-purpose GPUs and the raw electricity needed to run them. It's a bet on a much bigger, more stable demand. And you have to understand, this is not just some isolated story about one company. What Bitfarms is doing, it's the very definition of a canary in the coal mine. It's that early signal. You could see it as a warning sign or, as a huge opportunity sign. Either way, it points to a much, much bigger trend that's picking up serious steam.
Okay, so let's zoom out from Bitfarms and look at the bigger picture, because this is where things get really wild. This insane demand for compute has kicked off a global investment frenzy. Everyone is scrambling to get a piece of the physical infrastructure that underpins all this AI stuff. And the numbers? Well, they're just staggering.
And this just gives you a little taste of how widespread this is. You've got heavy hitters like Blackstone and SoftBank pouring cash into cloud startups in places like India. You've got Blackstone's own data center company, AirTrunk, targeting India for its next big project. It's not just equity either. Even the debt markets are jumping in, with investors looking at junk bond deals to fund new data centers. And then you've got the old guard, a company like Cisco boosting its forecast way out to 2026, all because they expect this AI spending spree to continue. Everybody wants in.
But if you want to talk about scale, how about this number? $50 billion. That's what the AI company Anthropic is reportedly planning to spend on building out its own data center capacity in the US. I mean, a number that big, it's not just an investment. That is a statement of intent. That's a company betting its future and telling the entire world this is where the puck is going.
Okay, but here's where it gets really interesting for, people who aren't just tech investors. This isn't just a story about Silicon Valley throwing money at servers. The ripple effects are spreading out and hitting completely different parts of the economy, and in a big way.
For example, take a look at Drax Group. It's a utility company over in the UK. Their stock price surged recently. Now, why would an electric company's stock pop? Well, it's simple. Investors are placing huge bets that power companies are going to be one of the biggest winners of the AI revolution. I mean, think about it. These data centers are unbelievably power hungry. They need a shocking amount of electricity, and somebody has to generate it. The AI boom is, without a doubt, also an energy boom.
So okay, we've got this insane, frenzied level of investment. Naturally, we have to stop and ask the big, scary question. Is any of this sustainable? Or are we just watching the inflation of the next great tech bubble?
And there are definitely people pumping the brakes. You've got this lone sell analyst looking at the sky-high stock prices for Korean chip giants and basically warning about AI exuberance. Their argument is that the valuations are they're getting difficult to justify. They're so stretched that these stocks are incredibly vulnerable. Any little piece of bad news, any minor setback, could trigger a really sharp decline.
And that really sums up the tension right now, doesn't it? For investors, for the whole market. On one side, you have this absolutely unprecedented, off-the-charts demand for a technology that could genuinely change the world. But on the other side, you have that classic nagging fear. The fear that every gold rush eventually leads to overinvestment, too many picks and shovels, and a bubble that is just destined to pop.
So that's the multi-trillion-dollar question we're left with. Are we watching the literal foundation of a new digital economy being built, an economy completely powered by AI? Or is this whole frantic scramble to build the data centers, the picks and shovels of our time, is it just the classic setup for the next great tech bubble? Honestly, the answer to that question is probably going to define the markets for the next decade.